good morning, everybody. I would like, first of all, to thank the organizers once again for this invitation. It's a pleasure for me to be here again. I will try to share with you today the views of the European Steel Association, which, gathers together national steel associations and also major individual steel companies such as ArcelorMittal, Tata Steel, and etc. So the outlook for 2022 and 2023 will be the main subject of my presentation, and I will try to shed some light on the possible outlook, given that we are actually facing, we as a steel industry, but also other energy-intensive industry, unprecedented challenges due to several downside factors, namely the rise in energy prices and previously supply chain issues, and obviously the war in Ukraine. So just to get started, a brief overview on the economic outlook and latest growth predictions and the possible evolution of the broad economy, which is obviously very important also for the industry. I won't make it very long, as one of my previous speakers already highlighted. Growth predictions for 2022 and obviously for 2023 were already slashed. That's to say, revised downwards due to the impact of the war in Ukraine. Growth has already been slowing down on a quarterly basis since second half of Q3, since second half of 2021, particularly since Q3, due to the ongoing supply chain issues that already started impacting the steel demand and the output from steel using industries. And then other downside factors, obviously, which I've mentioned, further worsened the picture, particularly the war in Ukraine. But in a nutshell, the latest forecasts which we have available are from Oxford Economics. Recession, GDP recession is ruled out in the EU as well and in other major euro area economies in 2022, thanks primarily to the rather positive developments observed in the first half of this year, as a continuation of a positive trend seen in 2021, which was a strong rebound for economies after COVID. But in 2023, Oxford Economics, as you can see there, foresees flat growth in euro area and recession in Germany, which is the largest manufacturing economy in the EU, and also, very lower growth for Italy, only 1% growth. And the OECD is slightly more optimistic, a very marginal growth in GDP in the euro area in 2023. But again, a recession is foreseen for Germany, minus 0.7%. We foresee that the next 2 quarters, Q3 and Q4, will be the toughest moments of the current economic cycle. So the consequences of the downside factors I've mentioned will be felt most severely. So we will have most probably economic recession in the EU in Q3 and Q4, provided that, bear in mind that the US are already technically in recession. So in Q1 and Q2, the US enter GDP recession, and the EU is very much likely to follow. Having this in mind, there's a lot of uncertainty going on. But the outlook has become gloomier. But with almost full certainty, we foresee a recession in the EU economy in Q3 and Q4 this year, and probably mild recession in 2023. So this is another major leading indicator of economic activities, the Standard & Poor Composite PMI, Purchasing Manager Index Outlook, which in September this year has recorded the fastest decline since January 2021, still at the time of COVID, so a third consecutive month of decline, and due to soaring energy prices and heavy cost burdens for energy-intensive industries. All European industries are being impacted very severely, particularly German and Italian industries, and therefore the negative contribution of industry to GDP is very likely, as I said, to lead to a recession over Q3 and Q4 22. Why is that? Primarily, the main channel through which a recession is expected in Europe over the next 2 quarters is the prolonged impact of 2 major, let's say, factors. The first is inflation, which you all know about, but I think this chart is pretty much useful to give you let's say, a very sharp visual idea of the evolution of inflation in the EU and major individual economies. So inflation has reached in September this year record highs which were unseen since 1985, so over a time span of almost 35 years. But what's even more important is that inflation started to accelerate, as you can see there, already in the second half of 2021 due to ongoing supply chain issues, primarily lack of materials, bottlenecks along the global supply chain, lack of shipping and components, etc. So inflation started to rise already at that point in time, and it was, in my view, not only in my view, very wrongly underestimated by policymakers, particularly by central banks, who have started to intervene very belatedly. And with monetary policy hikes recently, so we will see that later. But the expectation is that inflation, which has reached 10% in the euro area in September and even 11% in Germany in September, inflation might ease slightly over the coming months, albeit remaining around very high levels in historical terms. The latest European Commission forecast says 8.3% over the entire 2022. The ECB says 8.1% in 2022 in the euro area, and a slowdown in inflation in 2023, 5.5%, which remains, however, rather high. And particularly worth mentioning, energy inflation in the EU in September was 41%, which was very, very high, and has created an enormous pressure on an enormous cost burden for European industries. So this is the second point of concern, the second major concern for the European industries, which is also a major factor triggering inflation, that is the rise in energy prices. So this is just to show you the evolution of the Dutch TTF index in over the last few years, and which is compared to a comparable gas price index for the US, just to show that the energy crisis and the rise in energy prices is pretty much a European problem, since the US do not have an equivalent rise in energy costs and are much more independent energy-wise, as it has been underlined by one of previous speakers. As you can see there, natural gas price, Dutch TTF, has been skyrocketing since July this year due to many factors. Also the fact that with a view to replenishing gas stocks, many buyers in Europe, particularly in Germany, have started to buy extensively gas, and this has contributed to drive the prices upwards. But then it has reached, it has gone above 300 euros per megawatt hour. Then it has decreased recently, but is expected to remain around high levels. So just to conclude this section on the possible impact of the energy crisis on European industry, we made this exercise, which is a comparison with other major energy crises that have affected European and Western economies in the past. So this, if we look at developments in prices, this is the most serious energy crisis that Europe has ever experienced, but the impact on the economy and the industry might be lower than previous crises. And this is our assumption. We might have a worst case scenario, let's say, but we tend to believe that, let's say, based on the latest actual figures, a more, let's say, a relatively more optimistic scenario is more likely. That's to say that the current crisis will not have the impact of the previous ones, particularly the two oil shocks in the 70s led to an inflation above 20% when crude oil prices, which were the main reference price for energy prices at that time, rose by 6 times. This time around, the rise in natural gas in the EU, which we've seen so far, was between 15 and 20 times, so it was much higher in comparison. But inflation should not exceed 10%, and the recession also in terms of GDP was much more severe during the 70s, whereas as we've seen, we might have a mild recession, a few decimal points in 2023 in the euro area and in the EU. So the conclusion is that the current energy shock is more serious, but impact could be lower on the overall economy. But it will be more severe for the industry, as you will see. So the contribution of industry to economic growth and also from steel using sectors in particular will be severely impacted anyhow, even in this more optimistic scenario, relatively more optimistic scenario. We go to a section on the evolution of steel using sectors in the EU. Steel using sectors are final demand, as you know, for steel markets. So steel users are actually the people who and the economic actors who buy steel from steel producers. And as usual, we present the evolution of the four major sectors: construction, which accounts for 35% of apparent steel consumption in the EU, automotive, mechanical engineering, and domestic appliances. As you can see there was a strong rebound after COVID during 2021, which culminated in Q2 2020, Q2 2022. Q1 2021, sorry, but mostly due to the comparison to the very low figures seen 1 year earlier in Q2 2020, when the COVID pandemic broke. But then we've seen a rather pronounced slowdown in growth rates in steel sector's output over the second half of 2021 due to the increasing impact of supply chain issues. And particularly, you see automotive, which is the red line, has continued to drop for 3 consecutive quarters and appears to be the most impacted sector during the current downturn, as it has already been during the previous crisis. So automotive remains the weakest steel using sector, most exposed to global disruptions and downside factors. However, overall, thanks to positive developments recorded over the first half of the year, we expect 2022 overall steel-weighted industrial production index to record growth, which will be very low by 1%. But however, it's worth underlining that the latest figures we have so far are up to Q1. We expect Q2 2022 to show a continuation in the downward trend and possibly also a few other sectors to enter negative territory in Q2 2022, and Q3 and Q4 will most probably see recession in steel using sectors output. But as a result, sweep growth should be positive in 2022. And these are 2 other major leading indicators for the steel using sectors and the whole industry. On the left-hand side, you see the evolution of orders from steel using sectors. Same pattern we see here is the very sharp rebound after COVID during 2021, which started to ease in the second half of 2021 due to supply chain issues, and then obviously orders has started to experience a downturn, particularly for metal goods and mechanical engineering due to the impact of the war and more recently the impact of energy prices. And on the right-hand side, the evolution of industrial production on a monthly basis for the UN major euro area economies. And same pattern here, the strong rebound in 2021 due to the sharp recovery in industrial demand in the EU. But however, you can clearly see 2, let's say, groups of countries. On the one hand, in Spain and Italy, and in the whole EU, industrial production volumes have almost fully recovered the losses seen during COVID, whereas in Germany and France, industrial production is still lagging behind. Particularly in Germany, production levels are still below. Far below the levels seen before COVID. And this is primarily due to the difficulties and the problems experienced by the automotive sector and the gloomy prospects for automotive, which is very important within the German industry. So to recap this section, these are the latest Oxford Economics forecast in terms of real output in steel using sectors, with the projected growth in 2022 and also 2023. So in a nutshell, in 2022, we will have still moderate growth in overall production. That is 0.9%, 1%. However, automotive will record another recession. That will be the 4th consecutive recession in output after that in COVID. That was very pronounced, -21%. But also in 2021, recession continued, despite the rebound seen in other steel using sectors. On the other hand, construction has proven particularly resilient and has particularly been boosted by public supporting schemes, particularly in relation to civil engineering and public construction infrastructure works, also thanks to the impetus provided by the Next Generation EU package. But also construction is expected to slow down considerably, and in 2023 will achieve a very modest growth of, according to Oxford Economics, only 0.7%. Because on the one hand, public construction will continue to achieve growth, but the residential construction market will enter will start suffering considerably due to the rise in mortgage interest rates for households due to the hike in policy rates by central banks. So this is the outlook for steel sectors. And then we come to the final section, which has to do with the overall steel market indicators for the whole EU. Here we, as usual, we present the overall EU aggregate, and we include all types of steel products. This is the overview of crude steel production in the EU since 2008, and this is to show that, in a nutshell, the point that I want to make here is that in 2021 there was a very strong rebound in steel production due to the recovery in steel demand after COVID. In COVID, we had a decrease of minus 12%. The rebound in 2021 was very pronounced, more pronounced than expected, 15%. But in 2022, we expect, according to our latest monthly figures, that roughly we should have a drop of roughly minus 4% due to the impact of the war and the energy crisis and the outlook of poor steel demand over the last 2 quarters of this year. But even more interesting, I think, is that to see is that production volumes over the past few years, even after the rebound in 2021, have never recovered from the losses that were seen during the previous big recession in steel production that was seen in 2009 at the time of the financial crisis. So the drop was even more pronounced than in 2020, was minus 30%. And steel production volumes have never fully recovered since then. The same pattern applies for steel consumption. Here we see quarterly figures to better show fluctuations. We have used the monthly average to smooth and, let's say, fluctuations also across quarters. But you see the trend with obviously a trough of the cycle in Q2 2020 due to COVID, and then the sharp rebound observed throughout 2021, which has, however, slowing down considerably. And we expect a downturn in volumes from Q2 2022 as a result of the many downside factors that are currently going on. But we've seen a positive, we've seen a quite positive first quarter this year. There was a continuation of a positive trend in steel demand, but we expect that the next 3 quarters will see rather negative numbers and drops year on year in Q3 and Q4 in particular. So as a result, in annual terms, we expect apparent steel consumption in the EU to experience another recession in 2022, which might be, according to our, let's say, rather less pessimistic scenario, so to say, should be of at least minus 2.5% in 2022, which follows the strong rebound, very strong rebound in demand, which has been seen in 2021, almost 16%. But is worth reminding, recession in 2022 would be the 3rd recession out of the last 4 years for the EU steel market. And in quarterly terms, it looks interesting to see. You see there the 6 consecutive drops in steel demand from Q1 2020 down to Q3 2020, then rebounds starting from Q4 2020, culminating in an exceptional 41% increase in Q2 2021 due to the comparison to Q2 2020 data. But then you see growth in apparent consumption has been slowing down considerably, albeit still positive in Q1 2022, plus 6.5%. And also worth reminding that growth in imports from third countries has continued to outperform growth in overall demand over the last 3 quarters. So recession is certain in 2022, and just a quick snapshot. We've touched upon imports. And this is a short reminder of the a very brief visual reminder of the position of the EU as a trade bloc versus all third countries. Trade balance for finished products, as you can see there, has been deteriorating over the last 5 years, and trade balance has been negative since 2017, and deficit has further widened in 2021 and also in the first half of 2022, for which data is already available. So the EU is becoming, that's the message, is becoming structurally a net importer of finished steel products. And then in the end, the outlook for 2022 and 2023, I won't repeat what I've just said, but the key points that I want to make, the key message is that high energy prices, natural gas in particular, are expected to stay at least up to Q1 2023, provided that uncertainty is extremely high, is unprecedented. So it is very difficult to foresee possible evolution of energy prices, but this will obviously impact the industry and steel demand. Economic recession is very, very likely in the EU in Q3 and Q4. Also, stagflation scenario is probable, maybe not, maybe just a mild recession. But in any case, we believe that the overall impact of the energy crisis and of the war will be lower than previous energy crises. In the worst case scenario, which is unlikely in our view to happen, we quote here an estimate that has been made by the European Stability Mechanism groups of economists, saying that in the worst case scenario, there will be a recession of minus 2.5% in Germany and Italy. This would happen in case of a full cutoff for Russian gas supply, which are very important. They account for 60% for Germany and 40% for Italy, the supply of Russian gas. But this is, in our view, an unlikely scenario. But in any case, the impact will be felt and is already inflicting economic pain. On the policy side, European institutions and government have already reacted, as I've said. Fiscal rules, so limits to public expenditures and to deficit, these limits have been removed until the end of 2023. So the Stability and Growth Pact has been suspended until the end of next year. But on the other hand, monetary policy has obviously been completely reversed following what has been already done by the Fed in the US. So the ECB has already raised interest rates twice recently and has announced that it continues to do so. And this is obviously bad news for the business and for the economy because, higher interest rates are not very supportive of economic growth, even though real interest rates remain widely negative, as you know, because inflation is very high and nominal interest rates are much lower. But other interest rate cycles follow. Possible improvement in the macroeconomic outlook, therefore, is very uncertain and is only possible from Q2 23, but subject to a wide unpredictability. And on the demand side for the steel market, steel using sectors output will continue to be impacted quite severely through 2022. With different developments across sectors. Automotive will be once again the most impacted sector because its supply chain is most exposed to disruptions at the global level and has been impacted the most also in previous recessions. So it will not recover from the losses seen during COVID in 2020, after another recession in 2021, and will also experience a recession in 2022, minus 2.7%. Oxford Economics is quite optimistic for 2023. They see even a 15% rebound in 2023. The German Steel Association is less optimistic and sees a growth of 3%, which in my view is a bit more realistic. But however, the automotive sector will remain widely impacted. The construction sector, as I've said, has proven more resilient and will grow also in 2022, 3.4%, but only 0.7% in 2023 due to the impact on the housing market of the rise in interest rates. SWIP will grow by 1% in 2022, and Oxford Economics believes that it might rebound in case of positive developments in the second half of the year by 3.5% in 2023. And apparent steel consumption in the end is expected to have recession this year around minus 2.5%. We formerly had foreseen a minus 1.7% before the rise in energy prices in this summer. We're going to release, by the way, new forecast around the end of October. So we're working on that. We're producing our new forecast, which will be available on our website. But recession will be at least, as I said, minus 2.5%. And another drop is very likely in 2023 of around minus 2%, but this is the range of probability is very uncertain depending on the unpredictable evolution of all the downside factors which we've mentioned, energy prices, possible gas rationing, etc. But in our view, even in a let's say very low probability of worst case scenario, so with a mild economic recession in Europe, apparent steel consumption is expected to be impacted. But just to give you an idea, during the COVID crisis, real GDP in the EU fell by 6% and apparent consumption dropped by 11%. So that's more or less the magnitude. So 1 point in recession in GDP in the EU is equal to around 3 points of recession in apparent consumption in the EU. But that's in our view, the most probable outlook. So very challenging times ahead of us in the short term, and we also have other challenging times ahead of us more in the long term with the decarbonization process and the Green Deal achievements that we have committed to achieve as steel producers. So that's the outlook, and thank you very much for your attention. Thank you.
Some questions. Thank you very much, Alessandro. Any questions from the floor? Mr. Baysal, can we have the microphone?
Again, thank you very much for the presentation. One thing I noticed that you have predicted a very high inflation for Europe, and also coming from the high prices of energy, which is the source you just cannot control. But the steel prices obviously is going to be affected, and it's going to keep going up. And I noticed that the industry that's hurt the most is the automotive industry, where the prices cannot be passed along because they compete with the rest of the world. Whereas the infrastructure, the steel that's used for the infrastructure, they can pass along the cost to the local industries, so it can work. Now, as a solution to it, why don't you guys consider increasing the quotas, especially on the flat products, to Europe? Because it really, if you want to help yourself and reduce your inflation, that will be a major factor, and it is something that you can control, and you should really consider.
The question comes from US.
Thank you. No, it's a very complicated matter. I'm not a trade policy guy, let's say, so I can answer your question to a limited extent. But what we've seen so far is that steel prices, particularly for some categories, have been slowing down compared to highs which were seen before, let's say, around the second half of 2021. So we've seen already some corrections. But the problem, as I said, primarily is really a very, very challenging problem, is that we need to, as steel producers, we need to cope with very, very high production costs due to the energy prices. And so this is a problem. We struggle to, let's say, not to pass on to consumers, to end users, the increases in production costs. But that's our commitment. But it's not easy, as you can easily imagine. But yeah, that's otherwise on trade policy. The Commission has made its decisions on the quotas and has made their assessment. So.
Well, trade policies are arbitrary. You can really control, and you're really hurting your automotive industry, which competes with the rest of the world.
Yeah, but we are, as I say, we are now competing with the rest of the world, and in our view, it's not really a fair competition in the sense that the rest of the world does not have the the very high energy prices that we are facing. So the competition is not totally fair in this respect at the moment. But yes, we will see how it evolves.
Thank you very much.
Yeah,
Michael?
several years ago, it was thought that you had to have a GDP growth of 2.5% in order to keep steel consumption stable. And the idea was that at 3% GDP growth, then you increase the steel consumption. Are those numbers that you are comfortable with looking forward to?
3% GDP growth, you say?
Increases steel consumption at
Yeah,
2.5,
it looks
keeps it stable.
yeah, it looks it makes a lot of sense. The point is that it's totally unrealistic. If we look, let's say, if you look forward to a 2-year time span ahead of us, I don't actually believe that we will have GDP growth above 2% before 2024. So as I was saying, very roughly speaking, the impact of minus 1% GDP recession in the EU is capable to trigger a recession in apparent consumption of about 3%. So that's more or less that's more or less the background. But yeah, I don't see, even though, as I said, I'm not terribly pessimistic, but I don't see a recovery in the EU economy above 2% before 2024. But it's extremely uncertain, so it's very difficult to predict.
So we have to get better at doing everything at lower cost.
Yeah, if possible. Yes.
And at lower volumes.
Yes.
Thank you very much. Any other questions from the floor?
Thank you. The steel user sector schedule, which you have provided, which is interesting, there is one figure, which is a 15.4% on automobile industry, which raises eyebrows. I'm wondering what was the guy thinking at that time, or maybe what are the rationale of a 15% increase?
Well, the figure comes from Oxford Economics, and I also find it a bit too optimistic. As I've said, for Germany, for example, our Steel Association foresees a growth of a rebound of 3% in 2023, which sounds realistic to me. There you have different developments across European countries and so forth, but general assumption is that at some point, you see the car market has been so heavily disrupted, has been so depressed that at some point you need to have a rebound. And steel producers are, however, investing despite very poor sales of cars. If you look at the most recent passenger cars registration numbers, car makers are investing, and therefore there are expectations that at some point demand will rebound. But however, I think that the overall outlook also on the demand side remains sluggish because in Europe we are lagging behind in the automotive sector in relation to the implementation of electric vehicles facilities. We're lagging behind compared to to the US, for example. So yeah. From Oxford Economics.
We have one more question. No? Same question. Okay. Any other questions? Over there. Yeah.
No, I wonder, and I really need your sincere opinion. It's been quite a while that the European steel industry is struggling. And despite all the cautions being taken over the last, say, 4 or 5 years, the protection, all being the funding granted under different subjects like decarbonization. Now, we just read that the German government is granting $1.5 billion. On the other hand, in Italy, Ilva is sort of half government owned.
Yes.
But still, the European steel industry is struggling. What do you think that fundamentally should really be done so the steel industry can come to a healthy position? Now, you've been lobbying as well for banning the scrap export. So overall, what do you really think should be done?
Well, it's a $1 million question because there are so many things which should be done, let's say in the short term, which I've just presented. Now we had to cope, not only the steel industries, but all energy intensive industries in the EU had to cope with at least 3 external shocks, which were totally unpredictable. We had COVID, we had the supply chain problems in 2021, then we have the, 4, and then we have the outbreak of the war in Ukraine and the energy prices. So all these 4 issues were totally unpredictable. These were short-term problems. Plus, we had structural problems, more, let's say, long-term problems. One was, as I said, let's say it sincerely, as you asked, import penetration has remained an issue because import penetration has increased over the years, and because imports are more competitive. That's it. That's very basically. And so we need to set out a strategy with the European institutions, with the Commission, to tackle this problem. But on the other hand, we have committed to decarbonize from now on to 2030. So we need to invest a lot of money, and our ask to European governments and institutions is that some money is granted to steelmakers to achieve these objectives, because European steelmakers cannot do it on their own. And so we have many challenges, and so there are lots of things which should be put in place. But first thing I would say is we expect, crossing our fingers, that no more external shocks will will happen in the next few years. We've had already so many, and we rely on public support from the Commission and other policymakers. That's because we need it. We need it because otherwise, I mean, the trend which we've seen over the past years is likely to continue. We've had 3 recessions out of the last 4 years, most probably another recession in 2023. So that's worrying.
Thank you very much. Any other questions? None. I guess already you had a lot of difficult questions, difficult times, difficult questions.
No,
Thank you very much.
Okay. Thank you very much. Thank you.